Welcome, everyone. Let's go ahead and get started. Today's session is really all about understanding the financial marketplace of funding opportunities and aligning it for every stage of business growth. So, to start off with, before we dive in, I want you to first imagine that you want to launch a Colombian cafe. Perhaps you just came back from a trip and you think the world should enjoy like the best possible cup of coffee. And so you've poured everything into planning. You've identified the location, got a business plan, some savings to get you started. But it's not enough. You need a financial boost to really be in a position to open your doors and serve that first customer. And you go to your bank, your trusted financial partner, and they deny you. Does your dream die there? Sadly, this can often spell the end of many great ideas before they've had a chance to start. And the cold reality of the funding gap uh, that really exists in the market today. So many businesses don't understand that they've got options. Worse than that, they don't know where to apply or really how to go about it. It seems pretty intimidating. And if say you've got some options in front of you, say you've got a term sheet, how do you decide if that's right for you and if that's going to serve your business's interests long term? So in fact, 77% of businesses have indicated that they've got concerns about their access to capital right now. Especially today, it just seems more timely than ever. Just things seem a bit uncertain at the moment. So navigating these three questions when you're pouring everything into building your business, uh, it can be complicated. Navigating the financial marketplace when you need access to capital, it's confusing, and it takes time that you, quite frankly, you don't have. So I want to tell you a little bit about our agenda today. I'm going to start off telling you a little bit about Swoop and how we're working to address this funding gap. We'll go through some funding options that exist for you at various stages of your business's growth journey. We'll go through some tips for success, give you some ideas on how to apply, and leave time for addressing your questions. So, quick note in terms of administration for today's webinar, we've enabled the chat for everyone. So any comments you drop there will be public. So if you have any questions, you can drop it there. We'll catch them. We'll cover them off in the Q&A. There's also a Q&A button in Zoom. So you can also enter your question there. And again, we'll make time towards the end of our presentation to go through that. So a little bit about us before we dive in. My name is Curtis Voisin. I lead our partnerships with accountants and brokers. These are the folks that are really on the front lines of funding opportunities with their clients. So my goal is really to equip these key business advisors with the knowledge of various options and provide options for solutions to address opportunities with their clients. And I'm joined today by Bhyran. He's really the star of the funding show today. He has an extensive background in banking and he leads our funding team here. He works closely with our accountant and broker partners in addition to businesses directly, and is a problem solver. So he's able to bring back lots of creative options. So excited to have him talk to us about what options exist for you. So a little bit about Swoop. We were really founded to address this funding gap. Started in 2018 in Ireland by Andrea Reynolds and Kieran Burke, really with the mission of making the financial marketplace more accessible to business owners. And how do we do that? We've built an international marketplace for both partners and business owners to access funding products for loans from over 200 lenders, grants, equity options, as well as savings, all within a single application journey. So no need to run out, go bank to bank or Google endlessly. Our mission is to provide you a single point of contact, a platform, friendly support from our funding team to bring you back financial solutions to your doorstep. So now, without further ado, I'll turn it over to Bhyran to talk more specifically about our loan offerings.
Appreciate that, Curtis. And yeah, if there are any questions, feel free to populate them into the chat function, and yeah, we can hopefully get them answered. Some may be specific, so we could take those offline, but happy to have any and all conversations regarding funding. So when we're talking about funding, we wanted to make it a little bit easy in terms of, segmenting it through different stages of a business's growth. So businesses kind of operate, they can be young, they can be more mature, they can be established. And our goal really is just to kind of identify through this presentation today, to identify and kind of highlight what options are available for yourselves, for your clients, for the people you work with at each of these stages. I'm sure you come across different types of businesses. I'm sure you've talked to a friend who's looking to start up a business, or you're talking to another friend who's got an established mom and pop shop that's looking to expand. We're just trying to identify and actually highlight different options that are out there. So we'll cover these in a little more detail as to each of the options that are available. We'll try to make it comprehensive, but not too comprehensive in that, it'll be hard to follow along. But ultimately, I kind of wanted to break it down to these three sectors. So it's going to be startups. So these are companies that have been around for less than 2 years in business. There might not be any previous trading history. So we're really trying to get a little creative with it and trying to find a solution based on either personal or the idea that you're looking to build out. So there are some lending options, there's some non-dilutive, as well as some dilutive options such as equity. Going beyond that, we're looking more into the growth stage itself. So we're talking about businesses that are maybe 2 years old or older, starting to, really get some market traction, starting to grow, have seen some high growth in their month over month, and now we're looking for some cash flow. This could be companies that have been growing very rapidly, have gotten some good orders, but are just, maybe struggling to meet payroll, or maybe struggling to pay some of their suppliers knowing they've got these orders on hand. So it's just addressing these options that can help bridge that gap. And then there's the expansion phase. So these are businesses who are a little more mature. They've stabilized, they've got essentially businesses that actually have had some significant growth, maybe now have a product market fit and are actually able to hit the market. They're able to grow, but ultimately they're kind of teetering off a little bit. So how do we avoid that? Well, that's going to be through different strategies such as acquisition or even just buying the real estate. So we'll touch into that a little bit more as well. But those are going to be for businesses again that are past that growth phase, have already established themselves, but want to re-enter that growth or start to expand and take it from that $5 or $10 million company to a larger one from there. All right, so let's dive right in. So when we're talking about startup funding, so like I said, we'll segment it between Canada and the US because there are some nuances with the different product. And look, I'll try to keep it relatively high level and happy to have a larger discussion. But when I say startups, we are talking about businesses that have been around for less than 2 years. So there's not going to be a whole lot of historical performance for us to work with. When you're approaching banks and when you're approaching different types of lending, a lot of times they're going to want to know, how are you going to pay us back? What are you going to do, and how can we feel comfortable doing this? And that's why there's usually a leniency on other factors outside of just business performance, and that could include credit score, it could include, your management experience, even the product itself. Do you have purchase orders? So there's a couple of ways that we want to make sure we're highlighting as we're presenting a younger company. But ultimately, these are some of the options that are available. So in Canada, there's three main options that we'd use from a debt perspective, and Curtis will touch on more of our equity and our grant options a little bit later in the conversation. But I just wanted to highlight more of our debt. So there's three primary options, and these are administered through through the big five banks as well as BDC. So there's the Canadian Small Business Financing Loan. So this is essentially a loan scheme that is government backed. So part of it is guaranteed by the government. Because the government is stepping in and they're providing their support, they're essentially allowing banks to take on additional risk. So it allows them to say, you know what, you're opening up a restaurant knowing it is a risky industry to get involved in. we feel a little more comfortable because the government is able to support this and they want to facilitate this. So typically the use of funds we're going to see in these are going to be for equipment, for renovations, for working capital, franchise fees, depending on the type. But by far and away, the biggest cost we're typically seeing for startups is going to be on the equipment and any kind of renovation that are required. Working capital is a necessity, but again, that comes as the business starts to operate, as it starts to get flow, ultimately cash will come back in and you start to use that cash to support business operations. This program can go up to about $1 million. There are some that, depending if there's real estate, depending if there's equipment, but usually we're kind of looking in that 350,000 to 500,000 range for this program. It does require some money to go down. As with any kind of lending, you want to make sure you have some equity in your company, and by equity means the down payment or your deposit going into this. So usually we're seeing about 20 to 25%, and then depending on the type of business and the type of franchise, those can kind of come down. But ultimately, there is going to be a requirement to go down, and we're looking at usually 75 to 80% loan to value. So that's kind of through that small business financing program. You'll see CSBFL, you'll see CSBFP, sorry, it's a bit of a mouthful. And that is, they're interchangeable. Depending on which bank you're working with, it will have that. Outside of that, and this is just kind of other alternative options, there is the organization called the Business Development Bank. So this is a government crown corporation in Canada, and their mandate is actually to support and grow small businesses. So through that, they're able to provide financing for startups as well, usually in the way of a term loan. So typically, depending on what your needs are, they're going to want to understand the project. Part of it when it comes to startup funding is how much is it going to cost you to start your business, and then how much is it going to cost you to run your business for those first 6 months until you're actually generating. So we want to make sure we understand that, right? So when we're putting together our loan package and we're putting together a request, we want to make sure you're almost itemizing to in detail what it is you're using funds for. If you're going to request this loan, and if you're going to request this type of financing from a bank, they want to make sure that you put the thought in through it. You've done your homework, you've talked to, suppliers, you've talked to, inventory providers, you've talked to employees and even just hiring, and you have a good sense as to how much it's going to cost for you to actually open the doors and then to actually be able to run your business. That's why and I'll go into the documents in a sec, but ultimately we want to make sure we understand the needs are, and that's what these term loans are for, is to really say, okay, you need 200K. What is that going to be used towards? Can we cut it down a little bit? If not, great. We'll provide you that, knowing you're going to put in some money yourself and you've got strong enough credit. And then there's another program I wanted to highlight, and this is more so for younger entrepreneurs. It's called the Futurepreneur Program. So it is in partnership with the BDC as well. It's a term loan. But essentially, when we're looking at it from the perspective of lending, it's for entrepreneurs who are under 40 years old. So someone who may not have a property or may not have the cash savings they're looking for, this is just a government program that's in place to provide lending, and it is a term loan as well, and it's a smaller amount. We're probably looking at 40 to 60K as the amounts, but it is going to be used for these types of businesses. If you want to open up a retail location, or you want to open up an e-commerce company. This is a program that could work, especially for people who don't necessarily have those savings themselves. So when we're looking at putting together this package, and we're always looking at what information is required, and we're always looking at the actual historical element to this and the personal part of this. So credit score is going to be a huge factor here, knowing there is no historical performance from the business. So when we always look at it, it says, okay, the idea is if you can manage your personal credit, the idea is that you can be able to manage your business credit, and a lender will feel comfortable around that. When you have a business plan, you have your financial projections, it shows you've put the thought through, and you've actually been able to understand your business, understand your market, understand your competition, and they can feel a little more comfortable knowing you put the thought and the effort into this. From there, it's just going to be a little more personal information, like your personal tax returns. Are you maintaining your job, or are you quitting your job to open up this business? If you have outside income, great. That's going to help support any type of loan you have in there, because, in those first 6 to 8 months, as you're trying to build and ramp up, you have the ability, knowing you've got some savings or you've got some cash from a salary elsewhere, right? They're going to want to understand, your personal financial statements. So when you're looking at it from the perspective of a personal guarantee, or even just like how strong you are as an applicant, having property, having savings, having some access to liquidity will show a much stronger position overall. And then we want to tie it all together with the resume. So we want to show why are you getting involved in this business? What experience do you have that'll show you'll be successful in this type of opportunity? Do you have management experience? Have you done payroll before? Have you hired somebody? Those are all key skills, and you can learn them on the job. That's not to say you need to have them ahead of time, but we want to make sure we're presenting the best case possible. And we want to highlight you as well as possible. So these are our Canadian options. And Curtis, if you want to switch it over to the US, it's also very, very similar in that there is a large loan program called the SBA. So it's the SBA 7A is a very common loan program that we typically will use. This one, unlike the Canadian alternative, which is the CSBFL, these ones have a larger lending limit. So this can go up to 5 million in lending per borrower. So it does open up the door for some of these larger transactions, larger opportunities, especially when it comes to the franchise or even like, these build out spaces. Renovations in New York could be wildly different than renovations in Texas, right? So those conversations are factored in, and understanding that there is going to be a larger swing, having that larger threshold for lending will provide that higher flexibility. The other element to this, and we can go into this a little more, is that they do have longer terms. It's still very similarly structured, and it is partially government guaranteed as well. So outside of these typical loan programs that are government based, and these are commercial loans, another way that we access startup financing is leveraging personal assets. So that could be through, a personal unsecured loan to your business, to yourself, or leveraging the equity you have in your property, or even just kind of um, utilizing your brokerage accounts or your stocks or your portfolio to see if we can draw some equity out of that. Ultimately, if you have some assets, ideally you have some equity for us to leverage, and that's kind of our avenue forward in that you may not have the business funding available. There's always some nuances, there's always challenges that kind of go around with this. So how can we use your assets and your ability to repay a loan as efficiently as possible to get you the capital you need? And that could be through personal lending, and then we'd also tie that in with some business. So not to say it always has to be a commercial loan, and that is the only avenue forward. We do see personal options and lending to individuals directly as an avenue forward when it comes to starting a business. And then as the company grows, then it's something for us to utilize and actually start to look at commercial options for growth. And yeah, just wanted to highlight one of our successful Swoop stories. So this one is the Colombian coffee shop that Curtis had referenced earlier today. So this one is actually a company on Queen Street West in Toronto. It's a Paragua Colombian specialty store. If you're ever downtown Toronto, feel free, definitely check them out. They've got amazing pastries and lovely coffee. But ultimately, this is a story that a lot of people have faced as they are starting up their own business. They wanted to open up a store, they wanted to open up a coffee shop, they wanted to open up a restaurant, and they didn't have much success with their banks. They either just didn't present it correctly, or they didn't have the right financial makeup on paper, or they didn't highlight what they needed to highlight to actually get this across the line. So what happened was he had come across to us. We had a conversation with him, understood what his needs were. He already paid some cash and already purchased some of his equipment. And we actually went out through the banks, through our points of contact, and was able to position it successfully to actually help him open up the store. The QR code on the screen is actually it's a link to our case study with him. You could see him actually speaking his firsthand experience working with us, as well as, the challenges that he had faced. But ultimately, this is a good use case for a startup business who secured funding through the Canadian Small Business Financing Program. Cool. And then to switch gears and move more into the growth conversation. So these are typically businesses that are going to be in that 2 years, 2 years old and plus. They've probably just found their footing in the market, and they've likely seen, growth in revenue, but are struggling to keep up with their growth. We've seen a lot of these businesses where they've gotten one or two big purchase orders, and then all of a sudden now they're really rolling. Great story to see, but ultimately there are challenges that come with that. This could be a combination, and these challenges could be a combination of, maybe not getting paid by their customers in time while still having to pay suppliers, increase staffing costs. They have to hire new people. They need to actually it's hard making payroll sometimes in order to also while they're waiting for payments. And then even just kind of adding funding into marketing to increase that sales channel, right? There's, wanted to spend some marketing, having cash available for that, sometimes is an outside cost. You don't may not have the ability to support that. And some of these loan options are great for injections of cash for a growing company, either to bridge their cash gap or also to help them access their growth a little bit more effectively. So, just to kind of highlight a few of these options that we typically see, and these are the most common options. Again, these aren't all of them, but these are the most common that we will typically see businesses coming over to us for. So one of them being a term loan. So just think like an injection of cash into a business amortized out over, we can go up to 25 years depending if there's real estate, but ultimately, we're looking at a multi-year payment. So we're talking monthly payments of a fixed amount over the span of, let's say 5 to 10 years, and you're essentially using this capital to grow your business with knowing what the steady income or your steady cash flow is going to come out of your bank. These are typically required. These are typically harder to get in the sense that, we need to see some profitability within the business. We want to see at least 2 years. We would want to see like financial statements or formal tax returns, and we're dictating probably the best rates around that, 8 to 12, 9 to 12%, where things are currently. Prime is a little bit higher than we've seen historically, but ultimately, as prime goes down, then lending rates start to go down as well. But term loans are great options, good for businesses who want to acquire, want to hire some staff. They know they're not going to be able to get their ROI in the next 6 months to a year, but at least they can put some effort. Product development, they want to increase some of their, make their products a little more efficient, or even just wanting to get a little bit of a buffer for themselves for those just in case days. Alternatively, another great option is a line of credit. So this is something that, banks can administer. It's almost like a revolving line of credit where, you have access to this capital, you could draw on it as you need, you just pay interest, and essentially you could pay principal as you start to get your cash in. So this is good for managing your cash gap, good for businesses that are, struggling to pay their suppliers. Oh, oops. I think we lost the
Hey,
slide.
no problem. I'm back. I don't know what happened there.
Oh, all good. Okay. So just got pick back up. So line of credit options are good. Yeah, they're revolving options where you pay interest only and you can pay down principal as you start to get cash in or whenever you do have the cash flow available for it. So this is good again to manage your cash gap. If you've got suppliers that you need to pay while waiting to get paid by your customers, this is a good way to manage that. And also just gives you ultimate flexibility there. To go one step further, there's also asset-based lending. So this is, leveraging the equipment you have or leveraging some of the inventory or even receivables that you have, and ultimately using that as our base. These are things that business lenders will feel comfortable having as a back end. If there's a default, they have access to these assets that they can claim and get their money back. So they feel a little more comfortable and are able to provide stronger and better terms. So in those cases, we are leveraging typically the different types of assets in the business. Even IP is available, but in those cases, we just want to make sure we understand, what's available, what assets are there, what lending is already in place, and what security. So we want to understand what the true equity is and what's free and clear. Similar to term loans and lines of credit, there's also working capital loans. So this is actually just an injection of cash. It's very quick, very short term. These are, these are like revenue-based options like MCAs and other types of term loans. But usually these are shorter term facilities. We're talking up to 2 years in most cases. They are a little bit pricier because of the speed and the due diligence required, but ultimately it is an injection of cash to be used. A general rule of thumb is that we're looking at about a month to a month and a half times monthly revenue, and it'll be amortized out pretty quickly. But these are great for options such as inventory. You know you're going to pay off or you're going to be able to sell your inventory in the next 6 months. This is a great avenue to just get cash in without having to carry the interest of, over 5, 6, 7 years. You could pay it off much quicker, knowing you've got the ROI coming in very, very quick. So, marketing campaigns work for this, inventory purchases, even paying some short-term suppliers, meeting some payroll, like things where you need a quick cash injection. Approval times can take up to, within a day, right? So that's why we want to use these in very specific cases, and they are a very useful tool to facilitate growth. And then finally, I saw some names in the call that are some of our partners in the invoice finance factoring side, but it is a way that we can get capital into the business to help manage cash flow. That being said, what they're doing is you're using your receivables, you're essentially knowing this is going to be cash coming in or this is going to be income coming in, let's say in the next 60 to 90 days, you know, rather than wait those 60 to 90 days, you use one of these financing partners, get the cash in now, and then once you get paid by the customer, it ultimately settles this loan. So it's almost like a short-term bridge waiting for payments by your customers. Very, very useful, very, very helpful when it comes to growth financing, especially if you are needing to meet supplier demands, meet your purchase orders, and you're still waiting on pending customers. How often do you see someone like a Walmart or a Costco, dictating their terms with you? They say, we'll pay you, and you can't unfortunately ask them for quicker terms because they are a large customer, right? So in cases like these, great customers to factor, get some cash in real quick, and then use it for your next project or your next purchase. And yeah, just to highlight another case study that was using funds for expansion. So this is one of our companies, the App Lab. They're based out of downtown Toronto. So what they are essentially is a agency, or they're a tech agency that provides app development and support for different customers. So what they found was they were working with large customers, and they were on billing cycles. They would have to pay their employees, but they would be invoicing monthly and ultimately would be receiving their cash, 90 days from there. So really they have almost 120 days cash out the door before they actually get paid. So what we realized is that, okay, they needed some kind of a facility in place. We actually worked with them in two different scenarios. One was just an injection of cash, so a short-term working capital loan to meet some customer demands. But then on top of that, we were looking at trying to provide some kind of a line of credit where they can draw on this to actually pay some of their employees, pay some of their suppliers before they're actually getting paid. So it just helped them cycle cash into the business a little bit quicker in order for them to meet the demand. And that way they weren't able to run short. They tried to speak with their bank. Unfortunately, their bank wasn't very supportive at the time. So that's why, we stepped in, provided our support, given a little bit of a working capital, a little bit of a bridge to help them with some breathing room. And now they've really grown their business and they are seeing a lot of success. So another shout out to our team who done a fantastic job with this case study. So if you wanted to review the or watch the video, feel free to check out the QR code. Cool. And then lastly, this is just another area that we like to focus on, and this is in the expansion stage. So these are businesses that are typically a little more established. They usually have product that's maturing and revenue is stabilized. They've got consistent orders from customers, and they are more established with their sales and operation processes. So these are businesses that have been around for some time. They may be 5 years. It's hard to really put a timeline in there, but they've passed that growth phase. They're really stable now, and now it's just okay. How do we get from where we are to the next stage? And there's a few ways of doing that. There's organic growth, and then there's inorganic growth. And that's one of the ways we like to address, that expansion. So kind of going into these products, and these are very similar to what you'll see with growth, but term loan is a very good option. You want to start a new project, you want to, invest in a new product. These are good ways for yourself to get some capital in there to actually invest in that. A lot of times businesses that are in this stage already have a good cash reserve, but that's gonna be used for their general day-to-day operation, right? You want to make sure you have a little bit of buffer in case you have to, fix a truck or you have to fix some equipment. You want to make sure you have some cash available on hand, and knowing you don't want to outlay all this cash or outlay all these funds up front in order to help generate revenue down the road. A good way is to finance that, and that's through some debt, and that's through term lending and other alternatives. So a term loan in this case, could be used to just get, again, capital into the business. Rates are going to be low. We just want to make sure that the company can actually service debt and show that they're able to pay off a loan, and they can use these funds for growth. Another point that I want to highlight is commercial real estate. So how many businesses do you see are paying their leases and they're spending all this money on rent, but they're at a stage now where they can either expand and grow into a little bit of a larger space, or they just want to have some equity for themselves. They want to start to, instead of paying somebody else's mortgage, they want to have their own and build their own equity there. So commercial real estate loans are great at this point. You know, why shift your rent payments to a mortgage payment, have some profitability, and ultimately you are building that equity within the business. There are some structures in terms of from a legal perspective that you'd want to consider, like holding companies and whatnot. And we can always recommend you to some accountants and some lawyers to have those discussions. But it is a really good way to expand your business by taking up a larger space. Now you have space to bring in some new machinery, or now you have some more space to invest in that product line. We want to highlight those as options for us to be able to um, provide growth. The next thing, and I know I saw some questions in the chat, is acquisition financing. So this is the concept of inorganic growth, where you're not necessarily growing by your general user acquisition. You're actually buying a book, or you're buying a product line from a competitor or another company. That's just a way to increase the revenue of a company and ultimately increase your company's valuation. So we use acquisition financing quite a bit in these spaces. A lot of times it is reliant on the company you're acquiring. Can that company stand alone, be able to support can that company be able to support a loan on its own footing? Does it have the cash flow? Does it have the support? And if it doesn't, can your company make up the difference? So there's two different ways we look at this. So it's going to be, a general, like a strategic acquisition, which is you're acquiring maybe a competitor, or you're acquiring somebody for the use to actually grow their business, such as, same product line or book of business. Or there's just diversification element. I have this business and I want to buy a second business just to make sure that I'm actually, keeping myself recession proof or future proof, right? So those are just ways to consider acquisition financing, and we could typically go through different banks, different types of funding options, whether it be asset based or just cash flow based. And share and asset purchases, they do have different nuances there, and we could definitely take that offline if you are considering it, or even just another session on acquisition financing. But a very, very popular tool we're seeing these days, especially knowing that a lot of businesses, where their ownership doesn't necessarily have the succession plan in place, is just a way for them to sell, and we're working on the buyer side. And then on top of that, pretty standard is a line of credit. So helping you get some kind of revolving cash for those projects you want to invest in, for those needs that you do have, is just a way for us to get involved and go from there. And then, yeah, so this is another case study we wanted to highlight. So this is one of my clients. So they're actually based out of Toronto as well, in Distillery District. They provide float therapy, or so where you're sensory deprivation therapy. So when you're kind of in those tubs, you're really just kind of floating there, and it's a therapeutic experience. I have yet to do it, but I have heard excellent things. They also are, I believe, an RMT, and they also have other holistic solutions as well. But Roshan, an entrepreneur. He's been in the space for quite some time. He's done marketing. He's had some agencies there, and he wanted to basically just dabble and grow himself and grow his overall business portfolio with an acquisition of this studio. Saw a great opportunity. He was talking to a few different banks, and it was either too small, or it wasn't the right fit, or they didn't feel like he had the right background for it. But ultimately, we were able to position it, got him to the right lender, and was able to get this financed pretty efficiently, actually. I think we had about a 6 week turnaround time. But ultimately, it was a great opportunity for him. Now he's growing, and I think he's looking at essentially expanding further, either buying another studio or just another business himself. And yeah, just to kind of highlight a couple of things, just tie it all together. So what do lenders look for? So depending on the type of business you're in, there's always some kind of element to this, but really we want to know, businesses, banks want to know, do you have the ability to pay us back? Right? If we're going to give you this capital, are we comfortable in knowing we are going to get repaid? When it's just when they're doing the risk analysis, they want to understand that ability to service debt. Now, I know startups may not have the profitability or the cash flow to support it, but that's where that outside income, or you have strong credit, or you've got strong historicals to be able to support that. But that is a very, very important thing. So one thing to note is when you are talking to your accountants and you are looking to grow, a lot of accountants will create their financial, do reporting for you for the sake of saving on taxes. Great. I don't blame them. But I think in this case, it's when we are looking to grow, banks and lenders will want to see that they actually can pay it off. You're paying your taxes, you've got profit to actually work with to actually pay off a loan. So when you are having those conversations with your accountants or your CFOs or advisors, is position yourself that way. Am I going to do a funding raise soon? How should we make sure our books are set for this? Should maybe we shouldn't depreciate the way we should this year, or maybe I should recognize my salary a little differently, just to show that we actually are a profitable business and can take on any type of loan. That ties into the strong financial reporting. So we see a lot of businesses come through that may not have a good handle on their own finances. They might use some software, but they're not really putting much, they're not really putting great information in there. It's the concept of garbage in, garbage out. We want to make sure that you are on top of your finances. You know what is going into your books every day, what your P&L looks like, and you have a strong sense on that. And then to go further is that you've got a good accountant. You've got an accountant that is either, a CPA or a strong bookkeeper who can provide you with consistent tax returns that aren't going to get audited or not going to have any challenges there. Or we've got the right level of financial reporting, such as, compilation engagements or review engagements, depending on the size of lending you're looking for and the strength of your company. As your company grows, it's more important to have stronger financial reporting because, you want to establish yourself as a mature business, and this is a way to reflect that. The next thing is on experience management. So we want to, when we are going through lending, we want to show that you have experience doing this before. You might be a startup, but why are you stepping into this business? How can we position you as a successful candidate for funding? On top of that, if you are an existing business, not everyone's going to be the most financially savvy, or not everyone's going to be a marketing expert, but do you have the team in place to help you do that? We want to understand the holistic approach for this company. How are you expected to go from this $1 million company to a 5 million to a 10 million if you aren't exactly sure how you're going to operate? Did you hire the right people in place? So we want to know, is the management team a experienced team? Are there any issues? Is everyone aligned? And is there a growth there? And then to go further that, there's having a solid business model. We've seen a lot of businesses that are falling prey to some trends. They recognize that there was there was an opportunity to make some quick cash, but then it's not necessarily a sustainable business. Is your business sustainable? Is your revenue model airtight? Do you have consistent customers? Do you know exactly how you're billing and how you're going to be making your revenue? And it goes in line with your forecasting as well. So do you know how much you're expected to make if you shifted this lever versus this lever, right? So those are just things to consider when you are, and a strong business model is going to be very helpful when we are presenting this. We want to make sure that a bank can understand and I'm saying bank a lot, but we want to make sure at least a lender or someone looking to invest capital into the business, they can understand what you're actually doing here, and they can feel comfortable with the overall model itself. Segregation of personal and business finances. There are always incentives to put your personal on your business, but let's not overdo it. Keep it within reason, and also make sure there's a clear differentiation between your business bank account, and your personal bank account. You want to make sure those are segmented. Your finances are relatively separate. I know I recognize, you could put some lease payments on your company, you could put some travel expenses there, that's fine. But when it comes to bring this to lenders, they're going to start to question that. We want to make sure we understand that this was all for business use versus just writing your personal checkbook through the business. Right. And then one thing I cannot stress enough is having a strong credit score. It's not, depending on which lending products we go with, it's not do or die, but it is important to keep track of that, especially as you are going into lending as a younger company. Having a lack of historical performance, credit score is going to help alleviate all those issues or a lot of those challenges that a bank may see. And this is just a way for us it's essentially a score. It's a little bit arbitrary sometimes, but there are a lot of tools and there are a lot of ways that we can help out, and it is going to be an important factor when it comes to lending.
Well, thanks, Byron. Uh, so what I love about what you just went through, Byron, it's just one, it's sure there's loan products and the associated nuances between them, but what I loved about the case studies you shared was like it really speaks to the impact. You know, that startup got funded, that growth, that business in the growth space, like they got to move to the next level. So what we're talking about, while it's numbers and it's financial products, it does have a meaningful impact on the economy and just the ability for people to find their way in business, which is really great to see. A couple of other options I just wanted to share. So primarily this conversation is about debt-based products, but there are other non-dilutive funding options, namely grants. So grants are also a great way for your business to take advantage of government programs that you've certainly felt that you are entitled to, but don't really know where to turn. They kind of feel hidden. So there are a variety of grants out there for hiring, tariff relief, entrepreneurship, innovation. It can unlock funding that doesn't dilute your ownership. So these programs are often highly competitive, and they may require a professional. Like some of them are pretty easy to apply for. I think there's some job related grants if you're considering hiring a summer student in particular that you could take a half an hour to an hour and you could apply for yourself. But there are other grant programs where you might actually need to engage a professional just to increase the likelihood of a successful application, that you're compliant with meeting uh, the terms of that grant as at different stages of it fund or just from a compliance perspective. So where we've seen this is with the research and development type grants. So there's a certain level of preparedness that you need to go through before being considered, before you should even think about applying. So just engaging a grant writer earlier on in the process, one is just going to help you be more aware of your options, but also increase your likelihood of success in continuing to access government funding. So there are hundreds of grants out there, so it can be overwhelming to find the right one. In a moment, I'll show you, but to make grants more discoverable and to kind of make it more accessible, we make it easy to apply for grants through Swoop. We'll show you, say if you're even looking for one of the loan products that Bhyran had discussed. We'll also show you grants that may be applicable in your area. And if you need help with finding a grant writer for a successful application, we'll make a connection there too. And if you're interested in learning more about grants as a funding option, uh, we just ran a webinar on Canadian grants. Happy to share the recording of that as well as our grant guide. We've yet to do one for the US market, but if there's enough interest, feel free to chime in on the chat if that's something of interest to you there. And perhaps we can line up that as one of our next sessions. Another one that Bhyran alluded to, we don't have time to get into it right now, but another option from a funding perspective that we can potentially play a matchmaker role for you is on the equity side. So say your business is in high growth mode, and you think that you just need perhaps an equity investor, and so the first thing I would suggest is that develop a pitch deck and just make sure that that's rock solid. There's lots of resources. In fact, we have a blog on how to craft a pitch deck. So say take some time there, make sure that the business model makes sense, and that anybody that would pick up this slide deck could kind of see the value. And if you'd like, we can help make an introduction to our equity panel and bring you back some options there as well. Okay, and a couple of other tips for funding success. So Bhyran, I think you basically covered it, but a couple of other things I would just kind of add an additional point or two to. Just be proactive when it comes to funding. Make sure that you're building up your network of business advisors. So, for example, you can always reach out to our funding team for advice just to get an idea of options. Byron already touched on this, but the importance of speaking with your accountant about your options to get their perspective. Also, just to make sure that they're aware that you're interested in funding options. So they may, their primary mandate may be to reduce the amount of tax that you're going to pay to the CRA, but you do want to also show a picture of profitability, and then and that picture of your business's financial health will open up options for capital. So that goals alignment, those conversations are really important to have. And then you also want to make sure that your books are up to date. I'm a bit bit more passionate about this than the average person. I used to run a bookkeeping and payroll practice, and I can understand that you didn't get into business to do bookkeeping, but it's an essential pillar of your business. So if it's not something that you're able to do, make sure that you're investing, you find a suitable firm, and perhaps I know a lot of folks in the space and can make some introductions for you. Um, and so when your books are up to date, not only are you knowledgeable about where your business stands, but we can start to proactively bring some options to the table to you. And yeah, just make sure that you're staying on top of your credit score and payments, just so that when you are at the point of looking for funding options, that picture of your credit will resonate with a prospective lender. So hopefully by now you've got an idea of some funding products that you may wish to pursue and want to know what next steps look like. So here are just a couple of reasons why you may want to lean on your friends at Swoop to make it happen for you. So the first is that we've got relationships with over 200 lenders in North America. So really with a single application for you, we can help you access the marketplace of lenders. So from the big banks to some alternative lenders, and get creative with solutions and the ability to stack grants and loans to really address the full scope of the funding need that you have in front of you. So we can save you time over going to bank to bank. You'll have a funding manager as a direct point of contact for any questions, and we don't charge anything up front for our service. So typically we will earn a referral fee uh, off of matching you with a potential funding product. So we'll always seek to bring back the most amount of options for you and educate you on the pros and cons of one product over the other, and want to see you succeed. And also we're in multiple markets. So we were started in Ireland, so we're in Canada, US, UK, South Africa, and Australia. So if your business takes you uh, to these other markets, well, we also have lenders in those markets, so up to 700 lenders globally. Okay, and if you don't already have a Swoop account, I'll drop two links in the chat here in just a moment. So if you don't have an account, go to the links that we'll drop in, uh, and you can start your funding journey, whether that be for a grant or for a loan product, and our funding team will reach out. And if you have applied in the past, simply log back in, answer some basic questions for another funding application that you're interested in, and upload any relevant documents. So typically, we're looking for 6 months of bank statements to start, and then we'll provide a copy of this webinar recording to you so you have it. But Bhyran outlined some additional documents that you'll need depending on the funding product that you're most interested in. So a member of our funding team will reach out to you, help you get approved for funding, and you can get to work on fueling your business. Okay, so I'll drop those links in just a moment. And yeah, just to highlight, after you complete your funding application through Swoop, you'll see a dashboard similar to this where you can browse your various loan options that you could qualify for, as well as grants. Upload that pitch deck if you're open to equity investors, and yeah, looking forward to working with you to contribute to your future success story. So there's our contact information. I'll leave that up for a second. We're gonna turn it over to Q&A here for just a moment. I'm just going to pull up the chat here. Oh, whoops, wrong one. Byron, do you see any questions in the chat here just while I get these?
Yeah. So I'm going to I'll just answer the Q&A side first before we're kind of going into the chat. So I know Anas, you had a question regarding with so many loan products, how do you pick the best option for the client? How do you do the know your customer before to give options? So typically from our process and as you go through our actual onboarding journey, you can get a sense by the information you provide as to what you'd actually be eligible for. So you could do a little bit of research on your side and through our actual platform itself, there are some high level information like, where are you based? What kind of business do you run? What's your revenue, your credit score? A couple of just qualifying questions. And then through that, we use our software and we'll match you with different loan products. So there you kind of get a sense as to what you might be eligible for based on the information you provide. And as you start to upload your information, you can provide some of your accountancy data, your banking data, we'll get even a better sense, and we can even refine that more on what you qualify for before we even get on the phone with you. From there, we'll typically have a conversation, make sure we understand and actually go through your needs. So from there, what we'll do is, we'll do a discovery call, understand your business, your challenges, what makes you guys run and any challenge and any types of funding requirements you do have. From there, we typically know our lending network and we have a good sense as to what they want to see. And from there, what we'll do is we'll give you a sense, okay, you qualify for this, we'll go out to the market and we'll come back with solid offers for your review. From there, you'll get a sense on, okay, you qualify for this much. You can decide based on different terms, different structures, what will work best for your cash flow, and we can help walk you through that. But ultimately, our goal is to be aligned with yourselves. You could use our platform to do a little bit of that preliminary research and that digging, and then having a conversation with us will further reflect what it is that's possible for your business and what could be actually be a good fit. So we want to be there as trusted advisors in your network.
Right. So I think the next one for a new startup, there's options. What about grants? Is this a valuable option? How hard is it to get them? Um, okay, I think Byron, you did a pretty good job of going through options for startups. On the grant side, we have a number of grant writers that we work very closely with. They're probably the best to speak specifically to grants. Some of them can be quite competitive. Uh, the Can Export grant, for example, I believe the application process just closed. So some of them you only have a window of opportunity, either uh, annually or biannually. Some of them are rolling, so you can apply year round. But uh, you know, connecting with a grant professional will give you the best idea of how competitive it is. And sometimes it takes just knowing somebody at, OCI or at the various grant agencies that are overseeing uh, the distribution of these funds. So, but typically, I would say for grants, they are similarly looking for some time in business, at least I think 1 to 2 years, and then over a certain uh, income threshold. Now, some of them are there to service pure startups and don't have hard revenue requirements. But I would say that the more lucrative grants, certainly you want to be in 100,000, 500,000 plus in terms of your annual revenue. But there's so many programs out there, so I can't say exactly. Like, there's not one answer that will address them all. But we do make grants very easily discoverable in our platform. So happy to share a copy of our recent recording, or you can browse the list of options and read up on the various grants once you complete your application.
I
Okay.
um I see a few questions here just regarding specifics on your industry and your business. So what I actually do is I implore you to go online, register a business. You can scan that QR code and actually book a time in our funding team's calendars. And that way, we can have that conversation, address any specifics that you do have, and identify what options. Recognizing that it is, like an ag tech business, or even looking to do real estate listing services. Like these are niche and very, they are unique. So we want to make sure we give you the time and actually go through your business offering, what it is you're looking for, and hopefully we can find a suitable solution that makes sense.
Okay. We got one more here. Do you offer truck leasing and equipment leasing for all provinces?
And the answer, yeah, we do. We have lending in all provinces as well as the states for truck leasing and equipment leasing. Again, there's some nuances there, but happy to discuss any opportunities there. In terms of having a calculator to help clients with equipment buying versus leasing, I know we had a calculator built in, like a loan calculator on our website. I'm not sure if it's specific to leasing versus the equipment side, but that could be something if that is used. That's something we can consider adding to our website. I
Okay.
saw a question from Ahmed about are people liable for the CSBFL or other programs if their startup fails? So the beauty of the CSBFL is that it's actually 75% government guaranteed with a 25% personal guarantee. So you're not going to be responsible for the full amount. You will be responsible for that lessened portion. Depending on which loan program, though, if it is a 100% personal guarantee, then in those cases they do require that is the risk ultimately that's there, and that's how they secure themselves, is ensuring that you have the ability or you are committing to paying back this loan.
Okay, I think we've answered everything in the Q&A portion. I'm just scanning the chat here just in case. Um, okay, maybe a couple of general questions that I have here. Um, okay. So if I've been turned down for a loan before, what should I do differently this time?
So I think identifying what the reasoning is behind that decline was, right? It could just be it was presented incorrectly, and that's where, having an advisor, having a Swoop member have that conversation and walk you through what will happen. But there's other tools, a lot of times what we do see the reasoning behind declines is, lack of like not a strong personal credit score, or don't have enough money to inject, or just the business model that maybe need a little bit of work in terms of the documents provided, right? So there's some tools in place, especially when it comes to credit score and even trying to access capital to help with the down payment. There are ways around that. And then ultimately, we've got some resources when it comes to business plan preparation, as well as even financial forecasting. These are things that, not everyone may have maybe, strong enough to do on their own, but we have some resources and some support to help do that. But ultimately, identifying, what happened the first time around, and then we'd want to basically highlight why you'll be successful. And like I said in that startup slide, the more ammunition we have in terms of, regardless of not having any prior historical performance, if we can demonstrate that you've got a strong business case here, and we can really show that to banks, then we have at least a fighting chance of getting some additional funding.
Okay. I've got a question here. Are people liable for the CSBL or other programs if their startup fails?
Sorry, that's what I answered
Oh,
that just not funny.
yeah,
Yeah.
okay. Sorry, I was looking for other questions. Okay. We're US based. How many US financing participants are Swoop participants, and are they segmented by type of lender?
I'm not sure if I follow what that
Mm,
question is, but just kind of
yeah.
answering. So we've got lenders in quite a few different spaces. So there are product specific lending that we have, whether it be an SBA loan or a term loan banks, or even just like equipment and just working capital lenders. Like we do segment them by product type, and then some can kind of do a holistic approach. So our goal is just to, again, if it's the right fit and we've got the right profile, is to come back with different options for you to review.
Okay, next question is, does Swoop support pre-seed startups, especially those in the AI space and securing government grants? If so, if yes, how much are typically the charge on these services? Also, any specific criteria or requirements for a startup to get on board with Swoop? Okay, so a lot in there. So I would say yes, broadly. We do have some options for startup. Byron went through uh, the loan options. On the grant side, there are a few that are just sort of top of mind from the recent grant webinar that we went through. If you're in Canada, I know in Ontario, there's the DMAP grant, Digital Modernization and Adoption Plan. I think every province may have a version of this. So if you are investing in technology, either to modernize your own business, there's some grant options available there. But more than that, in Canada more broadly, there's a a grant called the Scientific Research and Education and Development. I think that's the E, otherwise known as SHRED. It's the most lucrative grant program that I'm personally aware of. And if you are doing something novel in the AI space or bringing something new to market, really important to connect with a SHRED advisor. Happy to make an introduction there. They can make sure that you are tracking the right things. You want to be tracking like your hours, your spend, kind of as it relates to the innovation or that change that you're trying to bring about to the market. And then more generally, let's say specific criteria. I'd say it's pretty broad when it comes to uh, lending, and I think Byron already touched on this. Usually, a credit score on in the startup side, it has to be a bit higher because we're looking at your personal credit because the business won't have credit or revenue necessarily yet. But we'll share a copy of this presentation. It outlines specifically the baseline criteria for any sort of startup funding there. But on the grant side, we can make a connection to a grant writer to see what you could qualify for. Uh, for business acquisition, can we use the asset-based lending? It can be 100% collateralized. Is it possible without a personal guarantee?
It, hey, Mehdi, I know we've chatted in the past, so great to hear from you again. It is possible, but it is just something I do want to discuss more because it is going to be very situational depending on the type of assets we're looking at. Like if it's real estate and whatnot, it's going to go a lot longer or a lot further than say like some inventory or like receivables, right? Happy to take that offline.
Okay, so still going through the chat. Byron, are you okay to chat for a little bit
Yeah.
longer? I'm just want to see if we can maybe we'll stay for another 5 minutes here, and then we'll make a point to follow up with everybody else after. But yes, we'll make the recording available and the slides afterwards. Looks like we got a vote for a U.S. grant session. Looks like some interested in the grant session. Yeah, lots of interest there. Okay, so make sure to follow up there. If uh, well, Byron and I will be reaching out after this webinar. Or I guess more generally, it will be led from our marketing team. And we'll be reaching out more directly. But yeah, if you have any questions, feel free to, if you're on the partnership side, the accountant or bookkeeper, broker, partnerships at Swoop Funding. Otherwise, you can reach Byron through one of these two channels as well. So one of us will be able to provide you with the guide as a follow-up. Do you deal with equity partner fundings? Yes. So we have an equity group. Basically consists of some VCs, some family offices. So if you do have a pitch deck, I would say very simply, you can indicate your interest in equity financing and upload a pitch deck, and we'll work with our equity group to see if there's a fit. Oh, great. Evelyn dropped in the grants webinar. Okay, so okay, okay. Just a question, I think, or a comment from somebody in the chat. So if you do create an account, our software does score the I guess the business funding. Uh, I I guess you would call it like more like pre-qualifies you in terms of are you going to have a high likelihood of success if we were to bring you to a lender? Now, unfortunately, not everybody reaches this bar, and not everybody receives a phone call or a consultation. However, we're always open to inquiries, and we're keen to provide some options, whether it's a credit builder or credit card. There is a minimum bar in terms of credit score, annual revenue, and so if you feel that you're not seeing any options, just reach out to us. We try to reach out to absolutely everyone, but the reality is we get a lot of folks that are applying that may or may not qualify, but we still always intend to provide options there, but good question. Um, for new business startups, besides business plan, cash flow projections, and personal credit score, what else do I need to obtain funding?
So I'd recommend gathering just personal information like yeah, personal financial statement, your tax returns, your NOAs, making sure you're up to date with the CRA, and then any kind of specifics on the business itself, right? So you have a business plan, projections, but project cost breakdown, any kind of supplier quotes, vendor quotes, even customer POs, like that stuff will be very, very helpful when it comes to presenting them from an early stage company.
Okay, I've got another industry specific one. We'll follow up. What happens when one of the shareholders has a bad credit report?
It'll typically average out. So there's ways around it, and as long as we can explain sometimes a poor credit report, then it is helpful. Like if someone just missed like a cell phone bill 10 years ago and just forgot about it, like that can be something that's explainable versus like consistently missing payments, missing issues. Then that might show a deeper issue with cash flow. So yeah, so it does get averaged. We always try to have the strongest score possible, but we can there is some context that we can provide that can bump up the score without actually seeing it on the credit report.
Cool. Do you offer multi-housing loans in terms of commercial real estate?
This one I'd have to maybe take offline. I want to say yes, but I just want to make sure I understand the overall ask here in a little more detail.
Hmm. We have a question about the correct email address, or sorry, the URL address. But yes, swoopfunding.com// CA for Canada. That is correct. All right, I think we're reaching the end here. Um, so if I have a client looking for funding, can I send them the link today? Certainly, Ahmed. You can send them like directly to Swoop, but what I would say is if you're if you're in a position where you're advising clients on funding options, there's actually perhaps a better experience that we could align for you that's uh, either led by you or led by a tracking URL so that you know that it's been introduced by you personally so that you have some visibility into that offer. So would love to connect and show you what those options look like and um, see what resonates. Um, okay. Oh, yeah, I have a question about uh, how does Swoop charge for its services? So, uh, I think I mentioned briefly, we typically get paid. Our business model is to typically get a referral payment for successful loan applications. The other situation is where we're working with a lender that doesn't provide or doesn't have a referral plan in place, and so in those situations, we'll work to like align you with a success fee. So we're not going to essentially we're not going to charge anything unless we're successful in finding you funding, and so those are the two options as part of
Yeah,
our business model.
and to expand on that, in some cases, we get paid directly by the lender. Others will get built into the loan, and then in some cases, depending on which bank or which lender we're working with, we may just have to settle an invoice after the fact. But again, everything's going to be on success. It's only if you see value in our service and we provided you an option that you like and you see value in, then we'll get compensated that way.
All right, maybe I'll make this the last question here. Do you work with other lenders or funders or investors who buy businesses?
So we work with a few partners that help on the business sales side. So if you are looking to sell a business or if you're looking to identify a business to acquire, we work with a few partners internally and can definitely make those recommendations, especially if you're looking at marketplaces. And then what we do is we step in and help with the actual funding or securing the capital to acquire that business. So we can work on the we typically don't work on the buy side there.
Okay. Well, that's it. If you have any thoughts on other webinars that you would find valuable from us, like say if there was, anything in particular that we touched on, whether it be grants, using the Swoop platform for as a partner, or any aspect of the financial marketplace that you would see value in, we would love your feedback on today's session suggestions on future webinars. We're keen to provide value and options, and hope that you all enjoyed today's session. Byron, thanks for sharing your knowledge. I learned a thing or two, so always great to see that ROI. Um, so, thanks everybody for hopping on. Have a great day, and we'll talk to you soon.